Hey traders, Raghee here. Happy Monday, everybody. Welcome to Charts and Coffee for the 28th. We're winding down the month of June here together. Very excited about what this summer could bring, whether your time horizon is longer term and you're looking to build some positions to take you into fall, or whether you're going to shorten that time horizon and just sort of stay nimble and day trade through summer, whether it's because you're going to be in and out of the office and the kids are home or whatever, or you need a little break. Definitely the nimble stuff is nice. We just finished our day trading class, the class portion, the classroom portion, which, by the way, for those of you that took the class, the practical, if you will, the tactical is now posted. And you'll also notice in your resources now and throughout today, we're going to be adding in, I got an intro video that we'll be uploading today, the chart book, which is the visual of a lot of the checklists and processes. A lot of processes we talked about on Saturday. Processes makes it sound so complicated. Recipes, right? Lots of recipes for setups. And then now I've got a lot of chart books, which is basically, what does the dish look like when we finish preparing it? So check that out. If you're with me on Saturday, it is not too late to join me for live trading, catch up on the class, get all the indicators for the package. So do check that out. And let's get to our question, shall we? Got a lot going on today and this week, because I think we're at some pretty important decision levels in terms of pullbacks and stalls that we saw last week. And again, what a class. Well, I really appreciate that. And, if there was any feedback, I've spent Sunday looking at the feedback, and there were a few folks that said, Rog, we'd love more chart examples. They are there now. Rog, we'd like a better idea of sort of how we need to progress after Saturday. That's going to be updated by noon today. We should get the slide deck to you all, hopefully at some point today. So yeah, and that slide deck has 30 extra slides just that are reference slides and more images, downloads. Yeah, so a lot of that stuff. We've just begun, right? Step one was the class. Now it's really going to be for the next 3 weeks, a lot going on. But I appreciate that. Thank you. I had a blast doing it. And no, I really, really appreciate that. Thank you, Em. Thank you. All right. So, no, thank you so much, gang. I really appreciate the feedback. And, I appreciate the positive feedback, and I appreciate the questions about, what else, what's next. I'd really like to see more of this. All that stuff's going to go in to the class resources over the next week. And then we're going to have the chart book for the live trading posted in there by the end of the class, because quite frankly, you'll notice the live trading days take us through the middle of July. And by the way, you can still join us for the live trading, watch the class, then join us this Wednesday. So again, really looking forward to it. All right, so let's get to some questions, shall we? Kicking it off with TAN, FSLR and TAN. Tommy, make sure we talk about TAN before. I don't want to go down the rabbit hole on First Solar, because I really like the broader TAN narrative. So FSLR takes us into the beginning of that conversation, but let's jump out to this view. All right. And what is this view? I call it the multi-chart. Why? Because it's a ton of charts. So let's pull up do I have TAN up here? Oh, I may not have TAN. So let's do this. I'll show you guys what we do to sort of get to know an ETF. All right, ETF.com. I know better than to type in a symbol. You never know where it's going to lead you anymore. All right, there we go, ETFDB. So if you don't know what's in TAN, and you're asking, well, Rog, what else would we look at other than say something like FSLR? So let's open up TAN, the Invesco Solar ETF. Take a look at the holdings. I don't memorize this stuff. There was a great quote credited to Albert Einstein. I think he probably tweeted it or something. And he said, I don't know my phone number. Why would I keep something in my brain that I could just look up? And I kind of feel that way about a lot of things. So here you go. So here's your tan. And take a look at what we've got here. FSLR is about 6 and change percent. So I could take a look at some of these other names to see what the overall structure of that market is. But let's start with sort of the, as I call it, the tide. FSLR is starting to move up pretty nicely. ENPH starting to move up pretty nicely. And FSLR in that group is, clearly participating. Now, since we know the movement is going higher on tan, we'd like to see tan go to a double green. Now, what does that mean? And those of you that took the class know double green and these tools are just as relevant on a 2 or 5 minute time frame as they are on a weekly or a daily. Once I go double green on this tide, now I feel much more confident because the tools by which I measure the market are indicating that I've got the path of least resistance taking me to the upside. So that's definitely what I like in terms of tan. And then FSLR, Tommy, to your point, is going to go along for the ride. So really, really like it. Let's see, PH, how you doing, PH? I dig the line. Oh, very cool. Yeah, PH, we're going to do that process. So the line in the sand is one of the 6 things that I do in the morning on the daily time frame. And PH, if you've done that this morning, you're going to see how much easier it is to now pick a side and not overtrade and get twitchy, right? Long, short, long, short, long, short. Intraday trading, you're going to have a much clearer idea of when the market's moving with the dominant psychology. And quite frankly, you can't do that unless you know what the dominant psychology is. So thank you so much. I'm so glad you get to put that to work this morning. I really appreciate it. Thank you. What is my perspective on corn? Hey there, Eric, for the next few months. There was a great quote, and I have my little notebook. I'm always writing stuff down. And there's this great quote. It's so funny you asked that, Eric. So in my little notebook, I just saw it this morning, and it really pertains to your question here. And it's a Warren Buffett quote. Oh, here it is. Forecasts may tell you a lot about the forecaster. They tell you nothing about the future. So when I'm giving you an opinion about what I think the markets are going to do, you're actually getting a bird's eye view of me, in my opinion, but not necessarily, because nobody knows the future, not necessarily what's going to happen. So I don't know what's going to happen the next few months. Not a clue in the world. You take a look at what's happened to ZC, corn's going to be basically suffering, in this case, if you're long, the same fate. We've had a very good planting season. We've had, for the most part, very stable progress reports. We've had some expectation that demand from China may be lower. So we're seeing a combination. And by the way, look how long corn has been choppy but bullish. Yes, this completely annihilates that. But look how long it's been choppy, but we keep with the overall trend that preceded it. But in many ways, if the master of trends is the FOMC, their opinion of the economy and how that opinion shapes monetary policy, it really disappoints me because this was such a great trade for so long. It really is pretty disappointing. But the Federal Reserve broke the reflation trade Wednesday before last. And so I don't know if I could point the finger at that, but ultimately, what do I think about corn? It is so off in the tall grass at this point. What I'm going to do is just refocus on where there is clarity. So Eric, I think the smartest thing that I can say from sitting right here is nobody knows, because that move right there is that we have no idea move of what's coming next. Now, let's wait for it to sort of, you see it's playing on beans. Even my beloved bean oil has been struggling. So let's be wary of trades that have been in that reflation window. I mean, look at lumber. I've been telling folks, hey, Rob, can we buy lumber? I'm like, well, when lumber does finally pull back, it's going to break hearts and it counts. And you can see what I'm talking about in spot after spot after spot, except for crude oil. So Eric, what is my perspective on corn? I know this is going to sound strange. My perspective on corn is go look at crude. Go find the corners of commodities and the reflation that have not been just upended by the Federal Reserve. I don't know, and I don't think anybody else does. Really don't. Let's wait for it to sort of find traction again, and then we'll reconsider. By the way, I would also consider in that group, be cautious with the cats, the deers, the Archer Daniel Midlands, and some of these commodity funds as well. That trade has for now been squashed like grape. Okay, so let's keep that in mind. But where there are squash grapes, there may be wine. Give it some time. Yes? All right. Let's get over to... I'd like more insight on how I use the daily. Perennial, here's what I'll tell you. The daily, so just to give you some insight, one of the things that we spent a lot of this class doing is, well, what does the daily Dow tell me about what my opinion is of the intraday direction that's likely to have the path of least resistance? The path of least resistance is really the mindset around the daily. Yes, every day is not going to be up in an uptrend, and every day is not going to be down in a downtrend, but there is a higher probability. So path of least resistance and probability, they may not be on the same sidewalk, but they are on sidewalks that move parallel to each other. So probability and path of least resistance do tend to be overlooked. And they do tend to be probably some of the more influential aspects of day trading that day traders often overlook or just don't know to look at. That's the insight. Use it. That's the insight. Okay. So JMO, I can't wait for you guys to have the slide deck because, you know, a lot of you saw every slide was, well, wordy, right? Because I didn't want you all having to look at a slide of just a chart or just, 9 words and go, what did she talk about for that slide? You saw it because each slide was almost like a page of information, where the slide deck is really more of like a flip of resources than it was just a standalone cue to make you jog your memory of, something that was talked about over the course of 4 hours. So I can't wait for you guys to see it because it is bigger than what you saw. There's a lot of resource slides, maybe 30 of them at the end of the official presentation. Good morning, Freeport McMoran. So Chris, it's going to be tethered to this narrative as far as I'm concerned, and that's the copper narrative. All right. So what I want to remember, rocking some Jamaican Waterford today, grounded myself. The Volcanica folks, Jamaican Waterford this morning in the mug, caffeinating me. That is tasty coffee. So copper, I'm going to wait because, see, Freeport McMoran is for the most part, do you see how it looks a lot like copper? So when I have a better feel for the HG, by the way, my stock and ETF traders out there, don't feel uncomfortable pulling up these commodities contracts because they are going, you don't have to trade them. You've got them in most of your accounts. I mean, TradeStation, TOS, you can pull these charts up. You don't have to trade them. But we do want to see, and I'm actually thinking, and I'll probably look a little closer, we might see, this could be a 1, 2, 3. This could be a potential 1, 2, 3. This would be the 1 point that we just put in with the minor low. And you can see the minor low confirmed with the Darvis, confirmed with the Darvis signal. We could see a minor low, 1, 2, 3, even a wave reversal as copper recovers, but might be a little soon. But I think we could definitely keep an eye on that. And if that happens on copper, watch how Freeport McMoran will follow likely the same pattern. Might look a little different because you're talking about a 9:30 to 4 market versus nearly a much more 24-hour-ish market. But I think you'll see Freeport McMoran start to track with it if copper can get out of its own way. All right. Next question is Skew. With the Skew at all-time highs, do I think it's time to take some caution or limit position size, or at least be wary of the potential for a market pullback, perhaps after this current surge? So I'm going to say something that sounds like heresy, to the point where you guys will probably, I don't even pull up the Skew. In fact, it's not even something I habitually pull up. The symbol isn't even on the top of my head. Skew, tick, trend, market internals. Quite frankly, I could care less about them. Not because I'm being dismissive and not because that's not a terrific question. It is. So let's think about, for a moment, humor me. Somebody might say, what? Yeah, I'm a heretic when it comes to market analysis, but there's a logic to it. Think about, and I don't know, maybe some of you haven't before. If you have time after the close today or something, go Google or look up on Investopedia, which is an amazing resource. What makes up a tick? What makes up the trend or the ARMS index? What makes up a skew? What's actually being calculated? And I wouldn't mind using skews and ticks and trends if I can make them the version that I want to watch. In other words, the tick is a perfect example. I don't care how all the stocks that are in a certain pool, right, are moving up and down. Because guess what? The market, in terms of the indices, the market, in terms of the broader opinion of the way our indices are constructed, don't care either. There are 6 to 20 stocks that move pretty much the broader indices. And that's all I care about. So when I dilute it with thousands of other names, I'm really not getting a real view of the market. So I want you to understand why I don't use it. If you use it and you've been using it to great success, fantastic. But please remember the second point. The reason I don't care, and the second part of your question is brilliant. Be wary for me and be wary for my approach, right? Remember, forecasting tells you about the forecaster, doesn't tell you anything about the future. So in my mind, I'm not going to be wary of the potential pullback. I'm going to be opportunistic. I'm going to be looking forward to it. I'm going to be counting on it, because sometimes the most bullish thing you can be, and I'm still generally speaking quite bullish, certain corners of the broader indices, certain corners of sectors. Sometimes the most bullish thing you can be is a short-term bear. I'm rooting for the bears because they're the ones that are going to bring the market down to a level that I will buy. The reason I don't care if we pull back, for whatever the reason may be, the reason I don't care, and by the way, my tools, which are price-based, volume-based, volatility-based, are sort of indicating the same thing, that we might get a little bit of a stall and or pullback. The reason I don't care about pullbacks is because I'm not engaging the market at the highs. I'm not having to worry about what would happen if the market pulled back from here, because I'm not positioned here. If we've been positioning in the broader averages, it's been when the market comes back down and touches a VWAP, touches a 34 EMA, touches a 21 EMA, pulls back to some sort of support, makes a Fibonacci retracement, maybe reverts to a lower V score, whatever the reason may be. So I'm not wary of it. I'm hopeful. I'm anticipating it. And if it pulls back in a way that the structure is still telling me buy the dip works, you know what I'll be doing? Sign me up. I'll be buying the dip. So the reason, whether it's skew or whatever, I don't actually follow market internals at all, because I don't think they measure necessarily even put call ratios. If you can go down the list of I don't pick any favorites from there. I don't like how they're calculated, so I don't think they reflect the broader market. And again, I know that might sound different than what you've heard, and maybe think about it and ask yourself, is that something that does that particular indicator, if I think about it, the last 10 times that it's done it, has it worked? Or am I looking at a recency bias or one of the many cognitive biases that are making me think, because I've had one or two big wins, that it's far more predictive than it is, and that bias is making me think that it's a good setup? You understand what I'm saying? I know I kind of deep dove on that topic, but that's a really great question. And I hope that answers it, both philosophically and quite practically. Okay. So thank you. And then, so for those of you that were wondering, as far as the multi-charts, I'll be putting the multi-chart links, at least a template, into the resources. But you guys all have these because I've shared my multi-charts since my ETF class last year. I've shared the multi-charts with all the rooms, but I'll make sure it's in the resources as well. So you guys can build out your own multi-charts on TOS for both the 1 minute chart and the daily, the 1 minute chart and the daily. And so the reason I do the multis, by the way, on TradeStation, it's really easy to change the time frames across all of these. You've got to build a time frame specific multi on TOS. For whatever reason, they don't have global time frame links the way TradeStation does. All right. So there's a Warren Buffett special on Tuesday night. Oh, very cool. That'll be fantastic. That will be fantastic. I appreciate it. Let's see. Hey there. So you agree they only become important when technicians want them to be in hindsight. Ouch. Yeah, but it's true. It's true. It's absolutely true. Hey, so that's it for me, for Charts and Coffee. JMO, I saw your question about currencies. I'm going to pass on them right now because of what the dollar's been doing. Let's be patient with the currencies. A lot of individual names are getting rocked because of the dollar, rocked because of sort of this uneasiness about risk appetite. So let's be patient about commodities. Let's be patient about currencies. Let's be patient about the reflation trade. I know it's been fantastic for the year, but it's really been shaken to the core. So let's look elsewhere. Tech has been outperforming. Energy has been outperforming. The pool of opportunity, yes, has been receding, but it's still there. So let's be a little bit more specific about what's on our watch list. And for now, we'll probably have to take a break on things that have been working. That's a very tough adjustment to make, but please make it. And I'll see you tomorrow for Charts and Coffee. Thanks as always for being a part of our morning get going session. And I'll see you next time. Be good to each other.